Vanakkam. Now I'm going to add another presentation in MOC, that is Memorandum of Changes. How to fill the form. What are the care that you are to take? Initially, I said you have to have clear working notes before arriving at NPA. Now you have identified NPA. Now you have to report. So in this first thing, the column as per the branch records, they would have put that customer ID number. They would have given me a list. They would have classified those accounts as standard. Then I'm comparing column by column. So customer ID remains same for both branch as well as for the auditor. There is no change. And second thing, also the customer account number, that also remains same for both the branch records and auditor's record, as well as name of the party. Same, it remains same. Now, the very important thing we have to see first, date of NPA. There are two types of date of NPA. The NPA has already been identified in the earlier year. NPA identified by this year. Since the NPA has already been identified by earlier year, that would have been audited by some other auditor, so you need not bother. For the new NPA, you have to give the report. So date of NPA, the branch they will put as nil because they have classified those accounts as standard. But in your report, since you feel that it is NPA, you have to arrive at the correct date of NPA. Then you have to put that date in that form. In your report that is proposed by auditor, you have to put the date of NPA. In case if you feel that that account would have become NPA earlier, so your NPA date normally will be, because we will not enter into other auditors area. In your audit, you have to say that the NPA date is 1st April, because due to some technical point, that account would have been escaped from NPA. But according to, if it is NPA, suppose for the year, in one of the cases where the NPA loan has been sanctioned in the year 1999, you are going audit for the year 2020. The 1999, the loan period will be around 7. So 2006. But still 2020, due to some technical thing, that account will be treated as standard. So according to, if it is NPA, then you can put the NPA date as 1st April of 2019, because you are going for the year 31/3/2020. So that thing you have to see. Next thing, the branch has to fill the code. What is the code? That code, according to branch, what is the code? According to you, what is the code? So here you have to, suppose if the branch has given the code as say for term loan, it is 501. Suppose if you are classifying that advance as substandard, the code will be 601. This code differs from bank to bank. This is the one bank record I am having. Suppose if the standard code is 501 and for substandard code, if it is 601, branch would have put 501. In the branch records, you have to type 501, and in the auditor's report, you have to put 601. So this is a thing you have to see. Then year of doubtful. So branch said last year if it is substandard, then that account would become doubtful. So then D1, D2, D3. So the branch has to fill the doubtful year. So in this case, since you have classified that advance for the first time, there is the year of doubtful will be nil, because that's the first year. Suppose in comparison between last year NPA statement and this year NPA statement, if that account has become that is skipped, then you have to put the year of doubtful as 2020. In case substandard remains substandard, the new statement, because due to some technical error the NPA has not been downgraded, then you have to put the year of doubtful according to you, according to your statement. So there will be difference between branch record and auditor's record. The next column is you have to classify whether that loan is term loan or CC loan. If it is term loan, you have to take the closing balance. The same figure will appear in the auditor's report because you are going to give effect only to the outstanding balance as well as for others. Term loan and others, that's the two column they are given. Both the amount remains same. Since the branch has not classified that advance as substandard, the unrealized column in the branch account, it is 0. But you classify that advance as substandard. You did unrealized interest working. You have to put that unrealized interest amount in that column, unrealized interest. And if there is any DSCGC, CGTMSC claim or any amount settled, both the branch, they will put same amount you can put in your report. If the branch has not worked out anything, and if the branch said there is no claim, then you also put 0. Then term loan minus unrealized interest will be the net figure. For branch, the term loan and the term loan minus unrealized interest, because for branch it is 0, so same figure will appear. But in your case, term loan minus unrealized interest, that is the amount outstanding. Then security value, what extent that loan is secured. The branch would have given some figure. You have to verify whether that security value is correct or not. If in case the machinery would have been purchased some 7 years back without depreciation, the branch would have put the 100% value, but you have to arrive at the depreciated value, that is the security value. This you have to take care. And is there any central government guarantee or bank guarantees that ECGC cover is available? Whatever amount the branch put, you verify. If the branch has not claimed and if it is there, then you have to deduct from your report. If there is no claim, then both the amount remains same. Then to what extent it is unsecured? Because the branch said that loan is secured, but you have arrived at some value. For that value, you should have the working. So that value you have to put. Then you minus it, you deduct it. Then that is the amount against which provision has to be made. So in NPA, branch record shows standard, your report says substandard, then definitely there will be a difference. Only according to your figure, the provision will be provided by the head office. But see that who is making the provision, whether the head office asks you to make the provision or the central statutory auditor, they will make provision. And as usual, you have to give the reason. In branch statement, there will be reason for MOC nil in case of new advances. And if it is for earlier year, they said for the earlier year reason that account has become NPA. You have to compare both. Only if the figures have been downgraded or upgraded, you have to give in your report. And at this juncture, you have to see one thing. It's a group concept. It's a per borrower concept. It is not per facility concept. Suppose if CC account has become NPA, his Jewel loan would also become NPA. The same status. Suppose if you are classifying the CC account as D1, the Jewel loan should also be classified as D1. It should not be as substandard. So the real status of first loan, the highest NPA status should apply to all the borrower loans. That is, it is per borrower concept. It is not per facility concept. This point you have to bear in mind, and you have to give the correct reason for everything. You should have the correct working sheet. And with reference to matters affecting P&L account balance sheet, you have to do just entry, that is double entry system you have to follow. If you reduce profit, that is any income, so in case if you arrive at any income, that would have been receivable. So credit, income credit, then debit to receivable. So just like journal entry, you have to pass the adjustment affecting the balance sheet. But you see that it is nothing but equivalent to trial balance.
So this is the thing you have to carry in that for each and everything, every account, profit and loss account code will be there that you can find from the statement which the branch is giving to you to verify and certify. In that P&L code will be there, and the same will be reflected in the balance sheet code, and through which return that amount is being shown. There's a return subcode is there. That you can find from the P&L statement as well as in the balance sheet statement and head of account. Whether it is bank charges, whether it is interest, to which account it goes, whether it is fixed assets, to which account it goes, everything you can find from the P&L account and balance sheet, and to what extent it is debit, what extent is credit, and you have to give the reason why you classify. Sometimes processing charge would have been omitted by the branch. Suppose if you recommend to collect, that is processing charge as revenue income, as revenue leakage, so that would have been credited to P&L account and the respective head. Then debit to customer account. So in which head, whether it is in a term loan, whether it is in CC, and you have to find the correct code and put it. In this way only you have to fill the form, and you see that the NPA, that is MOC, is being signed by the branch head also. Apart from you have to sign, and now MOC your statement you have to sign by using UDIN also. So don't forget to take your digital signature to the audit. This is the thing I want to explain about the forms filling. You just read the form, no problem. You can easily do it, but you should have proper working papers in your hand, because for what reason you have classified that advance as NPA, you have to do it. In case if D1 for the first year it is substandard, from the date of substandard, next year it is D1. For 1 year it will remain in D1. Then next year it will be in D2, and another 1 year it will be in D3, and it remains still as D3 till the amount is recovered. And sometimes there is no security, no pronoun, the amount would have been classified as loss asset. Be thorough with the IRAC norms. With this, I have completed the presentation of MOC forms filling. I once again request you to subscribe to my YouTube channel. Thanks for watching this presentation. Nandri Vanakkam.